If you're approaching retirement or already enjoying it, minimizing market risk in your portfolio should be at the top of your mind. The last thing you want is to lose a significant portion of your retirement savings right before you need it most. And let's face it, with market volatility at an all-time high, it can feel like a tightrope walk. In today's video, I'm going to show you practical steps to minimize that risk and protect your hard-earned savings. But before we dive into strategies, if you're serious about securing your wealth in the next 2 weeks, click the first link in the description below to discover why thousands of Americans are opening gold IRAs to protect their wealth. It's free, and it might be just the solution you're looking for. Now, let's talk about minimizing market risk in your retirement portfolio. First, it's essential to diversify. I know you've probably heard this 100 times, but hear me out. Diversification isn't just about owning a few different stocks or bonds. It's about spreading your risk across multiple asset classes. The more variety you have, the less exposure you'll have to a single market collapse. For example, traditional stocks and bonds might perform well in the short term, but in the long term, you need to think beyond that. A gold IRA is one of the best ways to protect your retirement funds. Gold has always been a safe haven during periods of uncertainty. And it doesn't just hold its value, it often increases in value when other assets are declining. So if you're serious about protecting your wealth, particularly if you have 100K or more in your IRA or 401K, or even up to $5 in savings, I highly recommend looking into gold IRAs. Another key strategy for minimizing market risk is to evaluate your risk tolerance and adjust your portfolio accordingly. As you get closer to retirement, you want to reduce your exposure to high-risk assets like individual stocks or volatile sectors. Instead, consider increasing your allocation to more stable investments, things like bonds, real estate, or even precious metals like gold. I understand that bonds might not sound as exciting as high-growth stocks, but they provide stability, especially when the stock market is on a downturn. And remember, while real estate can have some fluctuation, it is usually less volatile than the stock market. That's why adding something like a gold IRA into your portfolio can act as a stabilizer during times of market uncertainty. Another thing you should do is review your portfolio regularly. Markets change, and so do your needs. By staying on top of your investments, you can make adjustments to reduce risk before it becomes a problem. A common mistake many retirees make is ignoring their portfolios, hoping they will just take care of themselves. Don't let this happen to you. Lastly, consider working with a financial advisor who specializes in retirement planning. They can provide you with tailored advice that takes into account your specific financial situation and risk tolerance. But even with an advisor, remember that one of the most critical tools at your disposal is a gold IRA. Gold's historical stability and potential to grow in value makes it an essential part of any retirement strategy. So, if you're looking to minimize market risk in your retirement portfolio, start with diversification, adjust your risk exposure as you get older, regularly review your portfolio, and of course, consider adding a gold IRA to the mix. If you want to dive deeper into how gold IRAs can protect your wealth and why thousands of retirees are turning to them, make sure to click the link in the description. It's free, and it could be the best decision you make for your retirement. Remember, if you have 100K or more in your IRA or 401K, or even up to $5 in savings, this is the perfect solution for you to protect your future. Don't wait, secure your retirement today.